Hi, this is Alessio. Hope you're well. Here with you today with an important update and also some important information I want to share with you. And in this video, I want to share with you some important mistakes people are making right now and how you can avoid making these important mistakes. Before I start, though, you probably have noticed I'm here in my car alone. Actually, there's nobody out here. I'm sure you've noticed already. There's nobody out in the streets today or this weekend. The roads are deserted. Pretty much everywhere is deserted. So I've come out here on my own, sitting on my own and just having a bit of tea. Brought my flask with me, as you can see here, full of tea and cream. And, of course, with my Mozart mug. Oh, and of course, no tea would be complete without a book. So I brought Arthur Schopenhauer to keep me busy.
Boring.
No, it's not boring. By the way, guys, if ever you feel a bit depressed or if things are not going well in the world, then Schopenhauer is your best friend. In case you're wondering, why am I alone outside drinking tea on my own? In case you're wondering, it's not because of the whole situation, the virus. It's not because of social distancing and all that nonsense. No, actually, it's just because I don't like people. I generally just don't like human beings.
I don't like human beings.
No, honestly, I'm kidding. I was joking. Of course I like human beings. No, but I have to tell you, I don't like crowds. I don't know about you. I just don't like crowds of people in one place. I'm just not that kind of person. I guess that makes me an agoraphobe, whatever that is. But anyway, by the way, Jean-Paul Sartre, another great philosopher, a French philosopher, Jean-Paul Sartre once said, hell is other people. I think that is probably more true today than it was when he said it. Anyway, it has been an interesting week. I don't know how you guys have been spending your week. Obviously, probably on your own or with maybe some close friends or family. But listen, guys, wherever you guys are, I hope you keep safe. I hope you are healthy. And I just hope this whole situation goes away quickly so that, you know, we can go back to normal life again. I'm not so much worried for myself, but I'm quite worried for my dad. My dad suffers from kidney disease, so he has to go to dialysis about 3 times a week. So he's exposed to hospitals, 3 times a week. So I'm quite worried about my parents. I'm sure you probably are as well. Anyway, I'll tell you one thing I'm not doing, by the way, guys. Let me tell you what I'm not doing. I am not watching any news, whether it's financial news media or any mainstream media garbage. And I do say garbage because that's exactly what they are. Mainstream media and the financial news are the biggest turd burger, excuse the expression. They're the biggest nonsense and garbage on the planet. Because if you turn on that nonsense, all they're going to do is just increase your panic. You know, just panic about the virus and the stock market and the financial markets are going down. You know, that kind of fear and panic, it actually causes your brain to follow the herd. One thing I'm not going to do is follow the herd. If the herd is going to go one way, I can assure you I will go the other way. So let me tell you what I am doing. I'm watching comedies. I'm watching Laurel and Hardy. If you haven't watched any Laurel and Hardy, guys, you're missing out. Laurel and Hardy, I used to watch them when I was a kid, and they made their comedies, their films during the 30s depression, which is quite relevant today, as you can imagine. So, you know, they're hilarious, guys. If you've never watched any Laurel and Hardy films, they are so hilarious. Go watch them. It's all over YouTube. Just pick one. You'll be addicted to them. They're hilarious. They're making me feel happy. I'm watching reruns of The Office, the US Office, which is so hilarious and funny.
I do declare.
All right, guys, let's get back to what I was going to talk about in this video. So I want to tell you one of the biggest mistakes people are making right now and how you can avoid them. I've actually seen people mention this a lot on social media, and I want to make sure that people don't follow the same mistake. So one of the questions people are asking me right now is, which stock am I buying, or which stock am I planning to buy in the next few weeks or once the market bottoms out? A similar question people ask is, which crypto do I want to buy, and all that kind of stuff. So I want to try and answer this question the best I can. Before I continue, guys, let me just also mention any stock market or crypto I mention in this video is by no means a recommendation to buy or sell any of the stocks, stock markets, ETFs, or, you know, cryptos that I mentioned in this video. I'm just letting you know what I'm personally doing for the future. So again, as I'm sure you know, there's a significant risk of loss in any kind of investing. So going back to the question people are asking, you know, which stock am I looking to buy? The first answer to that is, I'm not. I'm not looking to buy any individual stock. Let me repeat that one more time. I am not looking to put a single penny, single dollar whatsoever into any individual stock. All right. The reason is that buying individual stock is extremely risky, and actually it's the wrong thing to do. I can assure you most professional investors out there, the majority of them don't actually buy individual stocks. And I'll tell you what I'm planning to do. So instead of buying individual stocks, what I'm planning to do is instead buy ETFs, index funds or exchange traded funds. So what ETFs are rather a basket of stocks rather than buying individual stocks. The reason is, the key word here, guys, is diversification. I'll explain a bit more about diversifying in this video. But if you listen to the great traders out there, again, traders like Jerry Parker, he mentions this point over and over again about the importance of diversifying. Here's a clip.
Diversification is very important and powerful. And so we do analysis of the markets, back testing and other ways to try to get a handle on which markets we should have in a portfolio and how they're all correlated.
So again, guys, the key lesson you learn from the great traders and investors is you need to diversify. And the best way to diversify is to keep it simple. And the best way to keep it simple is to avoid individual stocks, individual stocks like Twitter, Facebook, Vodafone, or whatever other stock out there. So I kind of avoid doing that. And instead, I like to focus on a basket of stocks. Again, ETFs, index funds, and things like that. So one of the most important reasons for doing that is, of course, because the risk of a single stock going to zero or falling dramatically, let's say 80%, 90%, is much higher than, say, an ETF or a basket of stocks. In fact, in one of my recent videos, I played for you what Bill Ackman, hedge fund manager and indeed investor Bill Ackman, said on CNBC. And he said he's looking to buy a few stocks like Hilton or restaurant brands, but he also said that those stocks could go to zero. Here's a clip.
Take a look at Hilton stock. We're a major shareholder of Hilton. Hilton is the canary in the coal mine. This is an incredibly well-capitalized, amazing, dominant global company, down from like 120 to 50. Okay, it's going to zero. Okay, along with every other hotel company, because every hotel is going to be shut down in the country. Every one.
Hang on just 1 second. You say Hilton is going to zero? I mean...
No, again, I'm a major shareholder. What I'm saying is, if we allow this to continue the way we allow it to continue, okay, every hotel company in the world, okay, is done. Okay, because no business can survive a period of 18 months without revenue.
So guys, as you heard there, what Bill Ackman was saying was, you buy individual stocks, the risk is they can go to zero. So one way to avoid that kind of risk or that kind of scenario is to avoid individual stocks and instead focus on ETFs. Again, looking at a basket of stocks, a portfolio of different stocks. So again, let me tell you what I'm focusing on right now. At the moment, one particular ETF I'm interested in, and I may consider buying in the near future, is RSP. RSP is the ETF for the S&P 500, but it's the equal weighted ETF. In other words, the equal weighted S&P 500. So S&P by itself is not equal weighted, but RSP is the ETF for the equal weighted S&P 500. So what that means is this particular ETF distributes the weight evenly among all the 500 stocks in the S&P. So just to give you an example, for example, this is from ETF.com/RSP. You can see actually on this particular page which particular industries RSP, in other words, this particular ETF, is investing in. They're investing in financials, consumer cyclicals, industrials, technology, healthcare, consumer non-cyclicals, utilities, basic materials, energy, and so on and so on. So notice they're not investing in one particular sector. And that goes back to the meaning of the word diversification. Diversification does not mean you just pick a handful of different stocks, which is ridiculous and extremely risky. No, diversifying means you also diversify among different industries, different sectors. The same thing would be true if you were looking to, let's say, buy cryptos. If you're into cryptos, for example, again, I think it's a good idea to look at different cryptos, not just one. Okay, I understand some of you, maybe there are some Bitcoin fundamentalists or Bitcoin purists who don't agree with me on that, but I personally don't see any reason against diversifying among different altcoins or different cryptos. So again, the same thing with stocks. With stocks, at the moment, for example, one reason I quite like this particular ETF is because it diversifies itself among different industries. By the way, the same thing is true if you were looking at SPY, the ETF for the S&P 500 large caps. But also one important thing you'll realize about this particular ETF here on this page, notice that it distributes the weights equally among all the stocks in the S&P 500. So which particular stocks are the top 10? Among the top 10 stocks are, for example, Regeneron, Pharmaceuticals, Clorox, Kroger, Gilead, Citrix, Netflix, and so on and so on. And these are only the top 10. And again, the importance of this is to understand that if you were to pick only one stock, let's say you pick just one particular stock, let's say that was, I don't know, Facebook or Gilead Sciences or something like that. Well, let's imagine that stock went to zero, right? So your stock goes to zero or goes down 90%. Then you have a problem on your hands. But again, with ETFs, you don't have that problem because the weight is distributed evenly among all these different stocks. So again, if one stock goes to zero, so what? The other competitor might benefit, or maybe the other industry, the other sector might do better. So that's one of the good things about diversifying properly among different stocks or indeed in different industries and among different ETFs as well. I'll give you an example on this. You may remember in 2008, one particular company went bankrupt, Lehman Brothers. But when Lehman went bankrupt, remember who won? Who benefited from Lehman's collapse? It was the competition like Goldman Sachs and JP Morgan Chase and so on and so on. So this is one of the reasons why it's important to be diversified among, not just among different stocks, but among different industries, different sectors and different asset classes. And again, it's a good idea to be diversified among, let's say, not just stock markets, but also gold, bonds, commodities, and so on and so on. I'll give another example of why I'm looking at ETFs right now, because one ETF that I'm looking at right now is the VUKE. That's the ETF, the Vanguard ETF for the UK stock market. And again, you can see on their page, on this page, you can see it says that the sectors they're investing in is distributed among financials, consumer goods, oil and gas, consumer services, healthcare, industrials, and so on and so on. And again, you can see that some of the stocks they have in their portfolio is HSBC, AstraZeneca, BP, GlaxoSmithKline, British American, Royal Dutch, and so on and so on. And those are just the top 10. And by the way, one interesting thing about VUKE, the UK stock market ETF, is that it pays a dividend of 5.31%. 5.31 yield is not bad at all. Again, these are just some of the ETFs that I'm considering buying in the near future when this market eventually bottoms out. And again, guys, I know some of you probably maybe screaming at me, why would anyone want to buy these stock markets or any of these markets, in fact, given what's going on in the world with the virus and all that? The best thing we can do right now is not give in to the panic. That's why I'm avoiding mainstream media news or any kind of financial news, because all that does is just makes the panic and fear greater, and it makes people miss opportunities in front of them. And by the way, I would say the same thing about social media too. On social media, all you hear are people panicking. Oh my God, it's the end of the world. It's going to be depression, recession. Guys, so what? If the market drops further, if the stock market or Bitcoin drops further, great. I'll just buy them cheaper. Fantastic. Let them fall. This drop, the way I see it, is an opportunity. When the opportunity comes, I will be taking action. And let me tell you, most people will not. Most people will miss the opportunity because they're paying too much attention to the turd burger garbage of mainstream financial news media. All right, guys, I'm going to get back to drinking my tea, which is now getting a bit cold. And guys, let me tell you, nothing beats a lukewarm cup of tea sitting alone in a car park, in a park on my own in Ghostville or Zombie Town, whatever this is. Anyway, guys, I just want to wish you and your family to keep safe and keep healthy, and I hope to see you in the next video update. Cheers, guys. Bye now.